We start off with a $9 trillion countdown. That is the rough market value of all the big cap tech names reporting next week. Tesla kicks things off on Monday, followed by the MAGA stocks later in the week. And with the Nasdaq sitting about 1% away from its all-time high, well, next week's results light a new fire under this tech trade. Guy, what do you say?
Hi, Mel.
Hi, Guy.
Light a new fire. I don't know if the old fire's been extinguished, so maybe you just add fuel to the fire. I think yes is the answer. If you look at a couple of these names, they're really poised to do well. Alphabet's the one that sticks out to me. So, I think Google made an all-time high today. I think it continues higher. Still, despite the move, reasonably valued, if not outright cheap. So I think to answer your question, absolutely, we could see a reacceleration of these names.
Yeah, it doesn't hurt the fact that the 10-year yield is below 1.6% and looks pretty steady there right now, at least for the week it did. James, what do you think about next week?
With the exception of Microsoft and, to Guy's point, Google's strength, the rest of the FANGs have had somewhat of a sideways move. They're not participating in this recent rally, new highs on the NASDAQ, and I think what that tells us is that the companies, to use an old expression, that have a big moat around them are going to continue to keep trucking on. But some of the other names, Amazon, Netflix, Google, they pretty much topped out. And I think, a positive earnings surprise could give them some momentum to the upside. But within this group, I definitely like Google and Microsoft to continue chugging along as they dominate their industries and there's no competition in sight.
We've had some notable tech reports this week, of course, and I'm going to put Intel aside. But if you take a look at Netflix, for instance, that was a huge disappointment. I think people vastly underestimated the amount of pull forward that company experienced during the pandemic. On the flip side, we had Snap, which posted fantastic results. Grasso, I go to you on this. Which one do you think is more, of an extrapolation into next week?
Snap. I think you have to look at what the difference is with these types of stocks. Netflix was really a true pandemic play or a work from home play, stay at home, shelter in place play. But when you look at an Apple, which I still own, a Microsoft that was pointed out, these types of names are value and their growth. But when we look at going forward, these are names that just hit it out of the park time and time again. When you look at a name that so consistently recreates itself like a Microsoft, it's not old tech anymore. It was seen a little bit as old tech. Now it's not any longer. A Netflix has too much competition, was at the epicenter of everything that we think is good and bad about stay-at-home trade. Competition is coming on. I think Apple is going to be really shocking to the upside. By the way, Melissa, these AirTags, I'm going to be loaded up 10 to 15 of them at home. I'm going to put them on pets. I'm going to put them in cars for my kids. I want to know where everyone is. I'm going to track everything. $30 a pop. I'm probably going to buy 10 of them just myself. This is going to be such a boost to Apple. They never are on the cutting edge, but they always recreate something and everyone rushes back in. I think Apple's going to surprise to the upside, at least with stock momentum.
Do you lose things that easily that you need to buy dozens and dozens of AirTags? Come on, Grasso.
Well, things that can walk away. Things that can walk away. It's tough to keep track of a puppy. So now when this thing is running around, I want to make sure I don't want to put a GPS on him, but I'm going to put a GPS around his collar.
Somebody's going to put it on their spouse, I'm sure. We're going to show the board again of the big cap tech names that are reporting next week. And Brian Kelly, I go to you. I feel like this is a game show. Which one are you going to take into earnings?
Well, I can't see the panel, but I'll go with door number 3. I think that might be one, and that's the one that's interesting to me for a couple different reasons.
I think we're having some audio issues with Brian Kelly. Unless anybody can translate that. I don't think there's an app for that yet.
He said, I agree with Steve Grasso, everything he said.
I'm sure. I'm something to that effect, I'm sure. Guy Adami, I'll go to you on this. Which on the board do you like of the big cap tech names?
I can't. I'm sequestered like that guy from Game Show. Remember him? I don't see the board.
I'm reading the board to you. I'm reading the board to you right now.
I appreciate it. You can stop.
Microsoft,
Please
Facebook,
stop right there. Stop.
You said you couldn't see the board.
I said Alphabet already.
Okay.
Google. No, Microsoft is the next one, because Microsoft, to me, is the most important, not tech company in the world. I think it's the most important company in the world, and they've basically created that over the last 5 years. So I think Microsoft on that list, and I think, Steve said Apple's going to have a huge surprise. I think the same for Microsoft. So that would be my selection behind door number 2.
James McDonald, I see you nodding vigorously when Microsoft is mentioned. You must like this one.
Well, I always vigorously nod when guys talking, but yes, Microsoft's got it. If we pay attention to what's happened since the pandemic hit, I'm seeing more and more conference calls happening on Microsoft Teams. I'm finding more utility with those applications, and I'm finding myself more and more embedded as an enterprise to do business using Microsoft products. And obviously, we know all of the innovation that's going to come out of the cloud. Microsoft has got probably the greatest intellectual capital there in the pocketbooks to get what they don't already have going forward. So I do like Microsoft among this group.
Obviously, this group of stocks reporting next week, just the tech stocks alone. Carter Braxton Worth, a cornerstone, who we'll see in just moments, but he makes a point in his most recent note that it's very rare to have 5 of the biggest stocks report in the same calendar week. It is so rare. In fact, this is only the 5th time that this has ever happened. This is almost a quarter of the S&P 500, Steve Grasso. So obviously, this is going to be important for the markets overall in terms of tone and direction.
So I think, yes, I agree with Carter. And your setup, I think, is spot on. If you look at the 10-year, I want to take this angle of approach here, Melissa. If you look at the 10-year, in August, the 10-year was at 50 basis points, 0.5%. And then it rallied on a yield basis up to 1.77%. It's backed off to now 1.55%. Dare I say, again, that we are in a Goldilocks part of the market right now where you can have the cyclicals, you could have the reopening trade, and you could have growth all rally at the same time. And the reason why I say that is that obviously tech was spooked. Cyclicals were the reopening trade, but then we had Canada having shelter in place, Japan having another shelter in place, second round, India having cases through the roof. But here, where we're looking at from our view, we have record amounts of vaccines entering people's arms, even with the Johnny John issue or speed bump. But now you're starting to see where tech was nervous about rising rates. Those rates have backed off just enough for tech to move sideways, as Carter will probably mention or has mentioned in his chart work. And now you're starting to see those charts steepen just a bit. And then you saw the IWM that came in pretty hard.
Right.
Well, that's rallying too.
Right.
So everything starts to rally.
Oh, so we've got the gremlins out of BK shots. So, Brian Kelly, I want to get your take on this. Win, 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 says Grasso, for all the different groups in the market. It is the sweet spot. It is Goldilocks. Not too hot, not too cold, just right for everything to rally. What do you think?
Yeah, I mean, well, first of all, I'm glad I'm not miming anymore. I hope you can hear me. Mime fast money is not a fast money at all. Not a fun fast money. But, yeah, listen, I mean, it is all about rates here, right? I mean, that has been what spooked this market. So if we can get steady interest rates, and what we've seen from the economic data is that things are good, but not too good. So that goes to Grasso's Goldilocks environment. If you start to see some sort of inflation pressures again, if you start to see rates start to tick up, if things start to grow too fast, yeah, then we may have a problem. But, I think going into earnings next week, we haven't seen many potholes, Netflix notwithstanding. That to me seemed to be somewhat idiosyncratic. So I think going into next week, the momentum's there. It's just up to earnings to not screw things up, frankly.
Mime is fun for all of us, maybe not for you. And by the way, you play a mean charades. Remember when we played charades, Brian Kelly, during the Olympics way back when? Anyway, we want to go beyond tech here.
I do recall that.
It's memorable.
Shepard Smith here. Thanks for watching CNBC on YouTube.